Welcome back. The mid-cap index is doing extremely well. We have 5 stocks advancing for everyone, which is declining. The mid-cap index at an index level is up about 1% as we speak. Let's talk about the textile sector. The brokerage house MK has written a note indicating that most textile companies currently are operating at low utilization levels. This is due to subdued international demand and high domestic cotton prices. The note also indicates that the China +1 PLI schemes as well as free trade agreements will boost growth in the sector going forward. We've been talking about these macros. Let's get micro. We have Gaurav Davda of Jindal Worldwide joining in. Gaurav, that makes the 3 of us who are working on the last day of this year. But though your background looks like you are working from home, so good on you there. Everyone's worried about the way international demand is and domestic cotton prices at the higher levels. I mean, could you give us a sense of how exports are looking for you so far and what utilization are you functioning at?
Firstly, thanks for having me on and wishing everyone a very happy new year. I think, yes, Q2 was a bit rough, but we've seen that raw material prices have actually normalized. Exports have picked up. And I heard you mention something on China +1. I think that's a very real thing in our world today. And this whole start-stop situation of COVID, as far as China is concerned, is really deterring global buyers from actually, having a very, very heavy reliance on China for their, supply. And they are definitely looking at alternative options, with us as in India being, top of the heap as far as they're concerned.
Okay. Gaurav, to be honest, I did not expect you to be at home or be in Bombay for that matter. I really thought you'd be out somewhere partying since it's the New Year's. But as Mangalam said, that it makes 3 of us who are actually working on the last day of this year as well. Be that as it may, you are saying that yes, demand is looking better after a rough Q2. What is the general sense as far as the ground reality is concerned? Do you think this demand impact that we are seeing will last for longer, or will it make a comeback very soon? Because if we talk about home textiles division as well, across players that we have spoken to, they did say that export demand, at least here, is seeing a rapid fall. What is your take here? And generally exports, 19% of your revenues, how much can you grow it by, say, in FY24?
So, admittedly, I must say I'm actually not in the country. I'm on holiday in Singapore. So you got that one right. But coming to your question on raw material prices as well as demand, I think it's very clear we did see a slowdown in demand in exports, in the last quarter. But that was also because there was a big violence in the movement of the raw material prices, and buyers were simply trying to catch a falling knife as far as the raw material prices were concerned to get the best deal. Now that things have normalized, I think they are back in the market. Planning for 2023 is very strong. Exports did take a bit of a beating in Q2. But we are seeing both domestic and export coming up very well. As far as export contribution to total revenue is concerned, from 19%, I think we should go slightly higher to about 22-23% come FY 23-24. And I think we're seeing good export orders even for Q4.
Right. You spoke about China +1 and India being a beneficiary of that. Over the last few years, the textile sector in India hasn't benefited as much from the China +1 or people diversifying their supply chain trends. I mean, a country as small as Bangladesh has, from right under our nose, taken away a fair amount of market share. This even as we saw the TPP break and all of that. So what do you think is different this time that India will benefit as against the other nearby countries?
I think that the sheer size of the capacity that exists in India, and with global buyers looking to consolidate their back-end supply chain, I think we have definitely benefited. We have chipped away at China's market share in the global supply chain over the last few years. Yes, it's a very phased approach that is happening. China even today accounts for about 50 to 60%, maybe more of the global supply chain, and you can't just wish them away. So the fact of the matter remains, we have been chipping away at China's market share. And yes, while other countries have taken some share from their, from the overall pie, I think India, given its existing capacity, size, scale, and labor advantage, I think we'll do significantly better going forward. And I think the market share gains will be for everyone to see going forward.
Could you give us some numbers on the kind of market share gains that we can expect from China coming in? And while things look optimistic, it's also important to put the risks on the table. What do you think could be the bigger risks?
Well, honestly, I think it's very difficult to give market share numbers today. It's very, very challenging because there are so many segments and sub-segments within the overall textile chain, whether it is, in terms of ready-mades, whether it is pure textiles, whether it is, various parts of the whole textile supply chain. And it becomes difficult to give you a kind of market share number there. Sorry, what is the second question?
The risks on the table, can you put them as well? Because, I mean, things are looking optimistic right now, but what happens next?
Well, if China suddenly decides to kind of operate at, suboptimal pricing, just in an effort to gain market share, I think that is a big risk for, countries like India. But besides that, I don't see much of a challenge, given the government's policy-friendly approach, the readiness of the industry, the cleaner and healthier balance sheets, and willingness of banks to lend. I think across the board, we're very well primed for a great 2023 onwards.
Okay, so that is something we'll track. So that's about the textiles division, the interesting foray that you've made, and we've been talking about that in the past couple of conversations as well, is the EV foray. Has the commercial production started here, 10,000 units per month? Is that something that you will continue to see as sales? And what is the capex that you're putting in here?
Well, so on the EV side, we are, I think we'll launch our product sometime in April. The manufacturing facilities are being commissioned as we speak in Ahmedabad. The total capacity that we're installing is about 2 to 2.5 lakh units. We have also finalized 40 experience centers across India, and in fact, are one of the few EV players to actually go to and set up an experience center in Nepal, in Kathmandu. And this is all finalized. I think we will launch our products, and you will see them, on the streets sometime in the month of, I think, May or June in 2023.
What could that mean in terms of revenues for you? I mean, in terms of a contribution, of course, it will pale in comparison to the revenues that you make from textiles in the extreme near term. But, I mean, to start things off, do you have any targets there?
Well, as I said, it's still very early to determine that, we will be competitive as far as pricing is concerned in the marketplace. The price range at which various of the other competitors are priced at. And I think we will definitely be very competitive, and we hope to achieve a target of 10,000 units per month on a run rate basis. So, that's something that we should be able to hit anywhere between, let's say, 400 to 600 crores of revenue from our EV business in the near future.
Okay, 400 to 600 crore rupees from the EV business in near future. Gaurav, it was a pleasure speaking with you. Thank you so much for joining us, and wishing you and everyone at the company a very happy new year as well. With that, we'll move on and take a short break and get you more on the markets and stock specific action on the other side. Stay tuned.